Hi there, traders, and welcome to Trade the Structure and another morning Jumpstart macro view. So it's coming to the Asian market session. We'll kick it off with our review. We're going to take a look at the key levels to watch out for, where we expect the action to play out, and what we could expect coming up. So starting off with the ASX 200. Hasn't done a lot during the day. This was the day session, so it was a real choppy action up until the close, and we ramped straight back down again. So it looks like the market wants to trade into new highs, flush into new highs, and to me, that's just a massive trap for buyers. Buy on the breakout, and then it's coming back off again. You see this push into new highs here, and then we come back off, push into new highs, and we're coming back off. So it's I would expect that we're going to continue that trend up. Probably push up through 73.53 today, maybe flush up, and I would be looking for a lower high. I don't think it's it's got a real distinct lack of conviction to the upside at the moment. Now this 73.26 level we'll show you in a minute. This is the SPY 200. We'll look at the ASX 200. It's a big level, and it's not really getting there with conviction. So you would expect if it's going to break up and through, it would probably pull back, retest, and then just go. Instead, the market's sort of continually chopping around that level, chopping around that zone, taking out new highs, pushing in new highs, and then failing straight away again. So you're getting minor pushes through and deeper corrections, which is not, to me, conducive with a very strong market. Now, it could be ramped higher. You might get the algos continue to ramp it higher. That's fine. At the moment, the US is brushing aside, and most of the markets are brushing aside inflation, brushing aside interest rate rises. Maybe that will come down the track where they'll turn around and it won't be brushing aside anymore, and the market starts to take a bit of a nosedive. But for now, it's still risk on. Potentially, it's because it's the only market to go into shares. Bonds still, even though there's interest rate rises, may take quite a few more until they become a bit more attractive. But for now, the key markets to trade are indexes for the bigger funds, the bigger instos. So I would expect, like I said, just to pop through here, maybe looking for a lower high. If it does fail, you might just get a push down to this 73.26 and then bounce. But like I said, I expect a choppy market again today. I expect a directionless market today, and I expect no follow through today, like we saw this previous session. So to get on board a big session and expect a key move either way, it's probably a lot to ask. You've got markets out tonight. You've got I think it was the pound. It will be, sorry, the GBP will be affected by the BOE talks. I can't remember what his name is, but he's coming out. Kashkari, I think it is talking out inflation. And you've got the same with the Fed Reserve in the US. You've got Powell coming out and talking again. So he's probably going to reiterate the same thing. We're not raising rates now, but expect a few more harsher rate rises down the track, which will be interesting to see how it takes. If they didn't take any concern last time, why would they have big concern this time? So I expect probably the US to continue to chug higher. Now, this is a bigger picture. This is a 30-minute picture on the ASX 200. We potentially could just grind our way up to this zone up here, 74.74 or 74.75. I don't expect too much. I just don't like this action. That kind of chipped higher, and that's been driven higher by algorithmic traders. It's just been grinded up. Now that could be a bit of a flush at that level, dragging some buyers, and then they dump on them. We don't know, or it just continues to drag up in this kind of a channel. So we'll see how that plays out. Now, looking at the Asian markets, this is the Hang Seng. You've got the market. It did nothing. Again, like the ASX, it was choppy during the day. It had the second session, which started to ramp up, and then it closed somewhere. It was closed somewhere up here when the index closed at 7 p.m. Sydney time. So it did a lot of work after hours, coming to the start of the European session, and then obviously the market closed. We'd expect this market obviously pushed up, failed off 22,310, but it held this 22,028 level. Now it's going to gap up on the index about 200 points or so, which would mean that potentially you're either going to get a bit of a flush at this level, start to hold, and then you're going to ramp again, or you're going to get it sort of ramp up into this level at 22,310 on the open and then potentially fade back down again. We'll see how it goes. Again, I don't expect a lot of action on the open. I don't expect sort of too much directional action. If anything, if it's going to be directional, I would expect a fade down. Okay, a push down lower. But the way the markets are, they're waiting for the US. They're waiting for the US to open. US does nothing, just grinds higher, and they're just grinding higher with them. So the day sessions, ASX, the Hang Seng, potentially the Nikkei, are going to do nothing and just wait for what the US does later on the start of the European session. Now, this is the Nikkei. It was somewhere here. That was the start of the Asian market, sorry, the European market open. It was about here, and you just saw that it drove higher before that. It just did nothing. So the 1045 was the open of the Nikkei, flushed down to that support zone, and then went back and tested it before we started to take off. So the Asian market session, like I said, did nothing exciting, and then it took off, and the big moves were after hours. Market closes here at 4 o'clock, I think, around there. European market opens at 6, and then the index is open at 7, and you can see this is around the 6 o'clock mark. Bang, up we go. It was all one-way action up. Okay, so it's going to gap up on the index, on the underlying index. So expect potentially a big gap and maybe try and back and fill, but the way that these markets are, it'll probably chop around. It won't really back and fill. You'll probably find that it's chop around between 27,520 and 27,690. So it's going to make it tough going during our market hours. But looking into the start of the European session, we might get some more direction. Dow. Now the Dow is continuing to grind higher. You can see this kind of action here, pushed up into this level, 34,780. We pressed up into that zone, chopped around that zone into the close, which if you go and look at the actual underlying indexes, the first hour or two, they popped up, they sort of pressed higher, and then it was pretty much, it was just a change, complete change in sentiment from going bullish to going completely sideways, and it was range bound action after that. So from about 2 a.m. City time, Melbourne time, it was sideways for the next 6 hours or so into the close around, 7 o'clock, 5 hours. So it was 5 hours of just a range bound market, and it was getting supported. Okay, so that's what you're seeing, sort of this action, which leads me to believe this 34.70.80 is going to hold, and we might get this pop higher, 35.025. Whether it's going to get up there, maybe through the European session before US opens, and then we get Fed Powell talk up interest rates again. But it's whether or not the market actually reacts, and they haven't so far. And I don't know if they, why would they react now? It's more of just continual grind higher for now. US tech, now that's something that should react to higher inflation or higher rate rises, but it's not at the moment. So, whether it's just it's like I said, it's the only market to go into at the moment. I do think it's going to be a bigger trap than we expect, and I do think it will have to eventually respond to these rate rises, but potentially, like the Fed, they only raise once. They're going to hold off as long as they can and talk up, like the RBA at the moment is talking up. We don't expect inflation to be high. It's already high. They're just kind of kicking the can down the road a bit. So it seems to be the same in the US, kicking the can down the road a bit, trying to hope that this inflation gets under control. They've been sitting on the sidelines saying inflation is not a problem. It's just transitory. Now, what in their eyes is transitory? That's kind of the key at the moment. Their eyes is it transitory for the next 6 years or whatever it is? But so it's sitting around 7 or 8, 9% in the US inflation, and they're not willing to really grab rate rises by the throttle them in a way that rate rises raise rates harder than they probably should do. So we'll see how that plays out though. DAX. Let's just take a look at the DAX here. Now the DAX is just toying with this level at 14,510 at the moment. It's pressed up into the level, failed. We got a low, then we got a lower high, failed. Held this little trend up, pushed up into the level again, failed again. So it's got these sort of 1, 2 legs down, 1, 2 legs down. Finding support now at a higher level at 14,240, but it's back into that zone at 14,510. So whether or not it's going to fade off this area, if the US doesn't, I can't see why they will. Again, it's all about inflation, and they're not going to raise rates to put too much pressure on the share market. That's the last thing the ECB want to do, along with the Fed Reserve. And it seems to be sort of that collusion between the Fed Reserves around the world, the BOE, ECB, RBA, and the Fed Reserve. They don't want to. They know that they're started a new rate rise cycle, and it's probably something they haven't dealt with before, especially the guys in Powell and the RBA Fed Reserve chairman. I can never remember what his name is, but they don't want to put too much pressure on the rate rise cycle. They want to try to leave higher inflation for longer, meaning that their shares can continue to tick higher. If they start to raise them aggressively, then you're going to get some sort of reaction down. Now, they haven't yet. Understand that every time there's talk of inflation, we've been built up to this sort of stage for quite a while now, and everyone's talking up, the market's going to roll over, the market's going to do this. At the moment, it's not. So it's kind of, guessing to when the market's going to start reacting to these rate rises. At the moment, Powell's talking up more rate rises down the track. The market's going higher. Okay, they're probably going higher on the back of a stronger economy. Fair enough, but you've got to ask yourself how much of these are factored in already. And if you can buy up at these extended levels, especially in the tech into the US, to these bigger markets in the US, the big S&P, some of these big stocks, if you can buy into them and say to yourself, there's a lot of upside, then good for you. But I just don't feel that there is at the moment. I feel like we need a correction before we can start to build a base and work our longs off there for longer term. DAX, so we're looking at the Ftse here. It's just been a grind higher, grind. So we're coming up from this zone here, 74.65, popped up through, we're consolidating. I would expect it's going to do the same thing in the European session, grind up to that 75.45, which would mean the market's up about 20 or 30 points, 80 points from here. So whether that happens, whether they can get up 80 points before I think the BOE come out and talk, or whether it's got more to do with what happens in the US, it's going to be contained. You don't expect the market to carry on too hard. So if you're happy to hold, buy the breakout and hold, where you're going to be buy the breakout like we were talking about in the Australian market, buy the breakout here and then be under pressure straight away for a long time before we get another press through the highs and then come under more pressure. It just doesn't make a lot of sense to me at the moment. So for me, it's a grind high. You want to be buying those into those pullbacks, see if you can get some sort of setup on the pullback. And we're on the 30-minute chart, so you can get into a 5-minute. I would be trading more intraday on the pullback. So you want kind of these zones here to be buying into these zones in here if you can get a setup there. But if you're not getting setups, then you just have to sit and wait to see what happens. Otherwise, there could be some action on the downside coming pending. We'll see. Into the currencies, the US is holding. We won't look at it. The US is holding within that range we spoke about yesterday. It sort of trended down, I think, overnight. Let's just take a look to make sure. Dollar index, yeah. So from the start of the European market session, it was all one-way action down, which is why you're seeing this push higher in the currencies. The Aussie market's obviously reacting. You've got better when the US dollar going down. You've got commodities doing better, and not so much gold, but the other commodities doing okay. Dollar denominated means a move down in the dollar, US dollar. You're getting commodities sort of being supported, and you can see that's been reflected in the Aussie dollar. It's getting more of a ramp higher, whereas you go and look at the euro. Euro did press high, but nothing convincingly. So the Aussie dollar has held off this support at 7.73.72. We were talking yesterday as a potential selling opportunity, which did play out. It didn't give us much. Probably it was about really not much at all, say 20 pips or so. And then it started to bounce. We started to find some support back off this 73.72 area. Okay, so market's pressed higher, pressed up through 74.28, and it's continuing high at the moment. So really, it's all bullish action at the moment. You want to be looking for a pullback, see if we can pull back and then consolidate. If we can pull back, start to consolidate here and give us a bit of an entry, and then you'll be looking for longs at the moment. Okay, so for now, that's sort of what I got in play. It's at a key level here at 74.73. So I want to see it react off that level, hold that higher low before it break up through that level. And that's a longer term level from the daily charts. Otherwise, you're going to get a flush. You're probably looking for a flush and then some sort of move back down again. But unless something changed in the equity market and something changed with regards to the US dollar, I wouldn't expect too much of a sell off here. Maybe flush, look for a lower high and press back down to 74.28. Euro, like I said before, the euro reacted up with the US dollar pushing down, but not a big move as compared to what we saw with the Aussie dollar. So you're seeing markets pressing down. We've got a bit of a pop here. Is it going to be a pop like this? We're going to retest into this high and then fail again, or are we going to continue to press up into 110.72? We'll just have to wait and see. For me, I'm sort of expecting a bit of move up, a bit of a grind up after that sell-off into the US dollar. So a grind up would mean the euro heads down, and I'll be looking for more something like this, a move back below this 110.30 area, potential higher low, a lower high to press into, and see if we can get a short off that level down there. Otherwise, you're just in this grinding market, a grind higher. But we'll have to wait and see how this US dollar reacts. I wouldn't expect it to do too much during the Asian market session to be the kickoff in the European markets. See if they get more selling into it, or see if they reverse that selling from yesterday and rally, okay? Which would mean, like I said, a lower high to work into on the euro. The pound has pressed high straight up through 32.10 and pressed into 32.76. It was a good extension in that market. You can see this is what we're looking at quite a while ago, that base built, then it started to press higher lows the whole way through. You can see the higher lows holding through here quite nicely. Whoops, you can see that there, higher low, it was somewhere around that 131.27, and then we've got that extension into this zone here at 132.76. Now, see, this is more of a key area at 132.76. We just have to wait and see whether it wants to, we get this sort of a pop and then we can get a lower high to work off, or whether it's going to continue to grind and you're going to get this kind of grindy action up from here. Okay, so just keep an eye on that today. US yen, what do you say? It's just a powerful market higher. Even though the US dollar went down, the yen went higher. You've got the yen getting sold off as well. So it's kind of like, obviously the yen sell-off is bigger than the US dollar sell-off at the moment. Not really a sell-off into the US dollar, but that US dollar pullback. Okay, so they're looking for the US yen, I would expect, to start to continue to press up to 127.66. Whether it can get there today is a different story. I think the BOE and the Fed speakers, when Powell speaks later on about inflation, interest rates, all that sort of stuff, it could cap that, and you may find that the US dollar starts to be buoyed a bit. The US dollar starts to get buoyed, and the yen doesn't do anything because there's no safe haven buying into the yen. Then expect this market just to continue to press higher. So it could spike up into that level. We'll just see how that goes. Now gold, with the share markets moving up, continue to grind up, sort of against a lot of expectation. There's no way this is going to be a safe haven. Well, it's not a safe haven, and it's not going to be an inflationary hedge. Okay, so you can see we're potentially looking at this kind of move down. Okay, if that's the move, you can look at extension, and maybe you got that, maybe you didn't, or maybe we're going to press down from here, hold below this level at 1925, and especially below 1930, and press down through 1920 and press into this low at around 1900. Potentially may flush into that level. I think it's got to do a lot with how the market's prepared to take these interest rate rises, or not interest rate rises, but what the Fed and the BOE is going to say later tonight. So if that's the case, the trend is down at the moment. We held this level here at 1940, pressed down through 1930, holding lower highs at the moment, and potentially we're looking to hold another lower high here. So I would be looking for, fair enough, we can get an entry through 1920 short with your stop above and just see where it goes to from there. But just be wary, it is getting a bit extended on the downside, and this move, this flush down, potentially was a bit of a stop hunt of 1920. Crude, this is what we're talking about yesterday. We're talking either you're going to get this break higher and then fail, or we're going to retest that level at 111.15 and continue higher. As it played out, we've got this move up through, flushed, taking out the stops, move back down below. So I'm sort of looking for this market to be pressured lower. I want to see a deeper correction. I'm expecting these to be that lower high. So you've got the retest of the zone, then fail, retest again, and I'm looking for that bigger failure, potentially back down to 101.75. Copper is holding that level at 103.65. Potentially, we've got a good move up here, and this was the first sort of decent reaction down where it tested into that zone there, which was a couple of days ago. It held 102.15, and we've got this move back up, and we failed again off 103.65. So whether we start to see some sort of action and we get capped at a lower level, which would mean a press back down that 102.15 area, and potentially to 148. Okay, 148 here, down this support area down there. Whether we do that, or whether we just start to continue to chop around here, we hold a higher low and start to press up and through. Okay, so we'll wait to see some more action play out. I'm sort of banking on the fact that we could see this level hold and we start to get this lower high and press down, but I think it's got some more work to do from here. Bitcoin into currency, the cryptos, they just pressed higher. So that was late in the Asian market session. So 1 o'clock, 2 o'clock into 2 p.m. yesterday in the Asian market session. That pressed higher through that 41,250 area, pressed in straight up, into 43,000, but held that level. So we got that expansionary straight up, took out the stops, pulled back, retested it, held it. So whether we're going to sort of drip feed into the shorts and sort of fade off that level and contract, because that was quite a strong move up. It was all of what you got. That move there was straight up was $2,000. So it was a good move, good strong move, and that just jammed straight back up. So if you didn't get long there, you got longs trying here. I think that's enough to turn around and squeeze them out and just grind their way lower. Potentially, we can get back into this zone through here, potentially 42, and if that starts to hold and we get this kind of action, look for a higher low, look for a press up through 43, potentially to extend right to 44,150. We'll wait and see. Now, Ethereum, same sort of action, jam straight up into 30, 36, and then start to consolidate. So that to me is looking like it's consolidating. And when you've got momentum, it's quite high, it's quite extended up here, and you're pressing down to this kind of area around that zero line on the MACD. and price consolidating, I'm expecting an extension. So I'm kind of weighted towards that kind of a move where we press back up, consolidate and go, above 30.36. All right, guys, that's all I wanted to talk about. It's been long enough. So I hope you enjoyed that. Hope you get some value out of that. And if you do, it'd be great if you can jump on the YouTube site. If you haven't all subscribed, feel free to click that subscription button or subscribe button and then leave us a like. All right, guys, thanks for joining me, and we'll speak to you again soon.